Good afternoon, Maverick traders. It's Monday. It's Joe. It's the 1st of August. Let's get into a market roundup. I've got my 2 cents on the markets. Take it for what you will. Follow along. That's great. Just make sure that you understand it's your choice, not mine. You guys get it. Let's get into the market analysis. I'm seeing a couple things that are pretty interesting versus long term versus short term. Now, we trade the markets in front of us, and I have to agree with what Rob and Darren were talking about last week on Sunday's Trading Room because these markets are showing some very bullish moves traction-wise. Let's get into, first of all, what we did today. The Dow, the S&P, the NASDAQ pretty much flat. Now, folks, all of these gapped down lower, climbed back to finish flat for the session. They were positive for a while, just kind of meandered down to the downside. I'm not going to look too far into it. Based on what we saw Wednesday, Thursday, and Friday of last week, they were due to respect the resistance that they had set basically the end of May and very early in June. Now, oil continues to fall to the downside. That's awesome in the short term when it comes to gas prices, right? We did have a build in gas inventory last week, which causes the gas prices to go down a little bit. Not a lot, but a little bit. But the continuation of weakness in oil could be something more bearish in the long term, with the expectation of the futures traders are expecting less demand in it globally moving forward. That means a slowdown in economic growth, so on and so forth. So take that for what you will. Now, gold, on the other hand, had a little bit of a blip to the upside. I don't see why it wouldn't because the dollar has been so strong lately. You could see that gold was probably due for some sort of a bounce in light of that. Now, the markets have climbed back to early June levels, about 11% from the pivot low that it set. This is pretty substantial. Now, it did take about a month and a half, let's call it that. And it set higher highs, higher lows, consolidated there through July, and then popped out over the last couple of weeks. This is actually pretty optimistic. We actually almost have a 2050 crossing back over. Take a look at the advanced decline line. We've got 51% declining, 44% to the advanced side. That's fine because today was a little bit of a hiccup day. But above and below the moving average was huge. I've seen this number, and I'll be honest, folks, I've been on vacation for the last about a week or so. But to see it 65.35 was really cool. Very optimistic, showing signs of at least some sort of a try to establish a bottom. Is this the bottom? I don't know. But it's a strong enough bottom for me to know that going into the end of summer and maybe into the fall, since we are getting out of earnings season, we could probably sustain some of these levels. So let's get into the charts themselves. Now, the breakout that I'm talking about is that push above the 400 level. We talked about this weeks ago. And to see it bounce at the 390 was pretty cool. But like I say, that Wednesday, Thursday, Friday of last week was a huge surge. The volume wasn't really weak. It was decent as well. Now we're back up to the 410, 420 area where this is resistance going to be here on the SPY. Sure, we might have to look to more earnings results, more speculation when it comes to traders that are like, okay, the worst is behind us. Think about it, folks. We are down. We're off of 11% off that bottom there. But if traders really are willing to absorb another 5 to 8% correction just to be early enough to 3 or 4 years down the road back up to the 470 level, they'll do it. And that's kind of what I'm seeing here. Past that, well, let's not say past that. This is basically speculation. But these markets are showing signs of resilience. Let's go to the Qs, and I'm going to bring up something else that I just saw in the SPY as well. We are extended. We are pretty far away from those moving averages, which means this last surge over the end of last week into this week is pretty extended. That's fine. You got to extend a little bit, consolidate, pull back. A pullback to consolidation is kind of what I expect this week, but the overall trend is bullish. That's just a fact. Now, the Qs, on the other hand, are above the 310 resistance level. Now, if this consolidates between the 310 and 320 level, this is going to be the stronger of the indices. Keep that in mind. It was the weakest for the longest time, but it's going to have that big bounce. We've got decent earnings from some of the stocks I didn't expect to. Apple, Microsoft, Amazon actually missed, but it went higher, things of that nature. So People are willing to put money back into these regardless of the outlook or the move forward. Now, today was basically a sideways day. You can see in the heat map consolidation, not a lot of huge bright greens in there, but not a lot of dark reds. Just, hey, we had a good move Wednesday, good move Thursday, and into Friday. This is the day we expect to consolidate. I would not be surprised as well, folks, if we get another down or a little bit more of a down day tomorrow. It's completely healthy after the move to the upside we had. Now, where does that leave me? I'm just trading the markets in front of us. Above 20, above 50, the 20-50 slope. Debatable, could be green, but I left it as yellow because I'll just wait for one more confirmation. Monthly outlook, definitely to the plus side, +1. Weekly outlook, I'm a +1. I would have been a +2, except we're already overextended because of Wednesday, Thursday, and Friday of last week. So I almost went 0 on that, but I'm just going to go ahead and give them both a +1. Now, as far as trades goes, guys, they're pretty decent. I took a look at the trades that were talked about on Wednesday's class and on Sunday, and they're all pretty much in line. The problem is, on a day like today, the end of last week, you're not going to get a lot of bears. Sideways might be pushing to the upside, but the bulls are pretty decent. So I've got more bulls than bears. In fact, I don't have any bears to look at. I do like OXY. I think it's great. It's interesting because it's in that gas sector. It's in that oil area, right? But it is still doing very well. So being patient, playing this as maybe a breakout above that 65, 66 mark. Let's call it 66, 66 and a half. Pushing up to the 70 area makes total sense. So something diagonal to the upside. Let's go to Pep. This is PepsiCo. I do like this. This broke out yesterday. It actually broke out on, not yesterday, excuse me. Today it broke out of the 175 level. However, it broke out of the 173 level last week, didn't it? Thursday of last week. So it's up against that resistance that it set at the end of April, around 78. So if you want to play it from here, that's cool. Sideways to up is great. Or if you just want to keep it on your watch list, see if it consolidates and pulls back before getting into it, I'm with that as well. Now, Rob jumped onto my Wednesday class for me as I was out of town, and he found this from one of you guys. Of course, Wednesday traders having the best trades. This is TAP, and I do love it. I love the confirmation it had on Friday. You guys were talking about it on Wednesday. It almost got there Thursday, but it still looks good. Not a huge breakout, shooting for a target of 65 or anything like that, but a diagonal spread, 61, 62, 62 and a half, whatever they'll give you. I think it's a pretty cool trade. Now, moving on to sideways, this one was tough for me because I've got a lot of I've got a lot of condor guys, and Maverick, we trade all sorts of different styles, and my condors love this. But what they have to acknowledge is this condor spread is 105 to 120. So this is a $15 condor spread, and they'll go outside of like maybe 100 to the downside, 120 to 125 on the upside. So you got $5 either way. So you're risking 15 bucks to make 2. That's fine. That's fine. That's how the condor rolls. You got a higher probability, so on and so forth. But I do love the fact this is within that range, and this is post earnings, by the way. So if you want to slow play it, just wait for a minute. But it seems to be doing pretty cool. Now I've got nothing on the bear side. Nothing. And the reason being is because nothing's triggering on the bear side. I don't think these markets are done with their correction yet. I'm not saying that that was the bottom forever. I'm just saying that the bullishness and some of the way that the markets are ignoring bad news or pricing it in, the expectations of inflation are already built in. Fed comes out, does its 75 basis point raise. Nobody seemed to care. The markets went higher. So I do think these markets are accepting the fact that we're going to slow down for a while and trying to get ahead of that. Keep that in mind. So are we bouncing or gaining traction? It's too early to tell. We're right up to get against those resistance levels that we set the end of May, early June. So far, remember those weekly charts, guys. Actually, let's take a look at the weekly charts here. It looks like an oversold bounce. It really does on all of the indexes. Just racing back up to a falling 20-day moving average. Doesn't mean it necessarily is. So you slow players out there, might be, hey, this could be that big bear rally. Shorter term, higher highs, higher lows, something a little bit more optimistic. So economics, slowing. We're definitely showing signs of slowing and retracement. We had the ISM come out. Manufacturing, all those productions are going south. It's slowing down, but the consumer is still active. And I truly believe that's what's kind of keeping these markets from really falling apart. They refer to it as a soft landing, but the consumer is still active. We're still shopping. We're still buying. We keep our jobs. Knock on glass here. Everybody's still got a job, so on and so forth. So if that can continue, then we could get a pretty decent slowdown, regardless of the inflationary or of interest rate raises. It'll be cool to watch. So we'll keep an eye on that. Earnings reports are going to continue. Most are good. Some are bad. Whatever's bad is just being met with a lot of buying. I'm seeing a little bit more optimism than pessimism. We got Activision, Devon Energy, Aflac, SBAC, and we've got Diamondback as well. Geez, they're probably already out, folks. I haven't seen any of them, so take a look at those and see how the markets absorb it. That's all I got coming out of a Monday, folks, and a long weekend for me. But we'll see where these markets go. But as far as the daily charts, higher highs, higher lows. That's all I got for you. All right, guys. Thanks for joining me. Talk to you next time. Bye, everyone.